Hello everybody, it's me, the Boss Hog, back with another wealth summary, this time for the end of May or start of June. Currently at 688,000. I'm going to explain the changes, what's happening, what's going to be happening, give you the general breakdown. Let's do it. Alright, so now the breakdown of the good stuff. Honestly, year on year as well as month on month, quarter on quarter, all up really well. Slightly less good than last month. Last month it was up over 170, so I guess from that perspective, slightly less good. But actually, it still feels amazing. Looking at these things year on year, and we'll do a broader comparison a bit later in this video. Always feels amazing and progressing really nicely. There are some big negatives here, but again, these are all within our control. So I'll start with the stoozing first of all. I'm going to do a video over June, probably in the middle of June or so, to discuss stoozing. What is it, how it works, the risks of doing it, the benefits of doing it, etc. But I've gotten quite comfortable doing it now. My wife has also gotten quite used to it as well, and we're just basically going through 0% interest repayments and sort of parking lots of money, putting it elsewhere into things like premium bonds or buying into shares or etc. So we make sure we've got everything covered, but basically that's how that works. Similarly, as well, we basically have sort of an offset mortgage at the moment, and we're sort of using that. It's about the same as we're getting in returns from premium bonds. Actually, I had a pretty big premium bond win, my first four-figure win premium bonds. That was nice just a few days ago. So generally, we're feeling quite good about the fact that we're sort of using debt to generate more wealth, which I think is the sort of advanced way of building wealth, frankly, and the thing that I want to be doing more of. Is it feels honestly weirdly easy. You just have to stay disciplined, and then the rest takes care of itself in essence. So everything else is moving in a really positive direction. To me, like we're running honestly quite far ahead at the moment in terms of our career expectations. When I sort of made these long-term plans, both myself and my wife were imagined to be doing less well than we were now, notably my wife, who had sort of a couple of fairly significant pay rises, but I'm also a little bit ahead of that as well. So that's been quite helpful to put us into a pretty strong position, despite the fact that I currently don't have a job as of the end of April. But I'll talk about more of that very shortly. But yeah, the general overview here is that most things are going in a really good direction. The ISAs and the pensions, which are going to be our main wealth contributions, especially, are moving in a really positive direction. And I don't really have much else to add besides that. So yeah, all moving in the right direction. And I want to break down what the current cash run rate looks like at the moment, with the fact that we still have most of the same costs with me not working. So let's do that next. Okay, so first of all, then two tables. The one on the left is what you would have seen if you'd watched last month's video. The one on the right is how things are currently looking. So obviously this has been a month, so things have moved forward a month, broadly in line with expectations, although slightly adverse against that expectation. The main reason for this is we went on holiday into Zakopane, the southern Poland, and did some climbing. But as you can probably expect, we were on holiday, we were a little bit relaxed, and we've sort of extended family down there as well. My wife's Polish, although from a different part of Poland than Zakopane. Also, as well, it was quite surprising to me, but Zakopane was very much still a cash city, so I wasn't able to put anywhere near as much of it on my credit cards as possible. Basically, where possible, I'm putting everything onto credit cards. That just seems like a very much better way of running it, so that I only have to pay it back when I want to. At the moment, I'm putting it onto credit cards specifically with 0% interest rates, so it's just being parked there and it's no problem. So that was the other somewhat annoying thing. Actually, because of timings here, the gross cash position, between videos has actually grown, but this video was made before my mortgage and my daughter's school fees come out, which are our two biggest costs of the month. So you can see once that actually goes through there, our net position is sort of down 2,500. But this is broadly expected. So actually, this is no big surprise. Like I say, it should have been a couple of £100 less, but it was in the same ballpark as we were expecting. Now, in fairness, our quarterly bill for our service charges for our flat does arrive in June, but it isn't due until July. So I decided not to include it in this month. It will be like £1,000, 1,100. So that will be showing next month. But because of the fact that this, summary is meant to be like the cash run rate, and actually it's not payable, it has no cash impact until July, it felt better to put it there. So just explain that a little bit. But you can see here that most of the credit cards are broadly speaking used up at this time. So I tend to just leave a couple of percent just in case I've got something on there that I've forgotten about or something like that. The big one that's not is the MBNA. So that's got £15,000 limit, and we're basically going through that at the moment. then the current account here will be used to pay for the mortgage, which has to come out of the current account, and the school fees, which actually also has to come out of the current account, annoyingly. So actually, that's going to be a pretty significant drop. But really, we're going to be using our current account for those mostly moving forward, and that will create a gradual reduction in our position. But again, we're quite well capitalized, and also as well, this doesn't include some other savings as well. So, then just to update in terms of my job situation, I suppose, or additional income. So, I did get offered a job paying 4,300 a month. Not a bad job by any means, and honestly, for the job, it was relatively straightforward, so I thought the pay was solid. There were some advantages that I was thinking about taking this. Mainly, it was a very short 3 month contract. It was with sort of a data company working with a UK telco, and it was really like within my area of expertise, and they really loved me. Like they were willing to offer me a 12 month contract, give me a full-time contract, not things I actually wanted. I think it was very obvious that maybe I was not quite the right person for that role, but maybe I was at one stage willing to do 3 months because I also thought it would be good experience to start contracting. But then, like, I got a couple of nibbles from recruiters for a couple of jobs in particular that I really like. One doing a sort of billing upgrade for a private medical company, and one doing a data migration for a trading company, as in I guess like stocks and shares trading. Both of these roles were really interesting, pay similar to what I was on in my last job, and it made me realize, I guess, that I didn't have the same excitement or enthusiasm for this particular role, and it felt a little bit unfair that I would be potentially starting at this role and not really comfortable giving it my all. And I mean, I had a really good interview with the guy who would have been my boss, and I just felt like I wasn't in the right headspace to actually fully commit to it. Didn't really feel like I had to either, so I didn't even have that kind of hunger or drive where I sort of felt like I needed it to pay the bills. It would have been quite nice because the take home from that would have been about 3 grand, a little bit higher than you would, lower, sorry, than you would typically expect, but because of tax brackets and things. But just I spoke to my wife about it, and we were like, we've got many months we don't have to accept this job, even though it would be nice because it would basically cover the everything, and it would start building our cash again. That we didn't really feel compelled to take it, and like I say, it sort of made me realize with the I was feeling compared to the other jobs, that my heart just really wasn't in it. So we'll see whether that was a good decision or not. But ultimately, I think it was the right decision. And I'm going to have second stage interviews for both of those roles I just mentioned next week that I'm looking forward to and basically prepping for already this week. So if either of those offered me a job, I would accept. And we will hopefully have an update on that in my next video. I've also agreed with my wife that I'm going to start side hustling poker. I used to do this quite a lot before my daughter was born. She's now 5. I did do it a little bit when she was in the early stages, but I haven't really played properly for a couple of years now, just to sort of focus on other things. I used to average an income of £25 an hour, give or take, so that works out about 50 grand a year. But importantly, with UK poker, it's classed as a game of luck rather than skill, which means there's no tax on it because it's classed as pure gambling. So this 50 grand actually feels like a lot more than 50 grand when you sort of when you look at the hourly and everything else. It becomes a very tax efficient way to supplement income. So it's something that I'm thinking about getting back into. I am a little bit rusty, so I'm not necessarily expecting to start at that kind of salary, if it's quite the right word. And obviously it's gambling, so it's going to be erratic and everything else. But again, hopefully I am a solid poker player, I think. Again, a little bit rusty, but I'm sure over a couple of sessions I'll pick it up. And yes, I'm going to try and do sort of 10 hours a week, something like that. And then, that'll work out £1,000 a month on average. And that will be a nice way to supplement income, basically. I'm also going to try and improve YouTube content. So I'm going like this whole channel from day one has basically been about making myself accountable. I genuinely have never had an attempt to monetize my channel to try and be particularly subscription hungry or anything else. I'm going to try and add a bit more value, try and be a bit more professional, and actually, yeah, just really try and grow the channel quite actively by providing value. So over the next couple of months, I'm hoping to that you'll see that come through, and we're going to see how we're doing over the next few months. But now I'm going to try and actively sort of stick to a schedule, do sort of, I don't know, 6 videos a month, something like that, sort of half about me, half about stocks I'm in or positions I have. So we'll start with stoozing. I'd also like to review Scottish Mortgage Investment Trust. It's my second position with 6,800 shares, so pretty big position. They had their year end quite recently. So that's worth reviewing. I'd also like to do a video about telco stocks as well. Definitely an area of my expertise, and I've been asked by three different people if that would be something I could do. So I'd love to do sort of a mini series about sort of telcos in general, and then some good telcos like Gamma, maybe Cerillion would also be a big pick for me, and then some bad telcos like Vodafone's my sort of perpetual Vodafone bear. So if anyone would like that or has sort of a telco that they either really love or really hate or sort of indifferent about, maybe somebody like AT&T or TELUS, Verizon, then I would happily be willing to incorporate that into a sort of series to look at that. I think it is tough to make money in telco stocks, but actually not impossible. And yeah, I'd like to sort of look at some of the hidden gems like Gamma, like Telephone Plus that you never would have heard of probably, but are actually quite serious little businesses that are worth some attention in my opinion. Next up, I'm also working on a children's book. This is probably going to sound really strange to most people, but I sort of make up stories for my daughter. I used to sort of do little limericks and stuff with my my biological family and my wife. I enjoy them. They're sort of part of my creative outlet, and I'm sort of working on something at the moment that I hope to have published over the next couple of months. And sort of just maybe seeing whether I can get a little revenue stream going from that. It's something I enjoy anyway. I've sort of got like a 5-year-old daughter who I can do test studies with. So it's a fun little activity as well. And then lastly, and probably even more strangely than children's book, I'm working on a business concept. I've spoken to sort of five, six, seven people at the moment about this. Everyone seems to think it's a really good idea. I also think it's a really good idea. I'm not really quite ready to sort of go out more publicly with the details just yet. Maybe next month. But what I'm working toward is something maybe by the end of July to sort of have a meeting with a few people in a hotel somewhere in London, sort of grab a room for a day and do some brainstorming. But I think I have an idea, and I think it's a good idea. I think it scales really well. It's something I'm quite passionate about as well. So, this may or may not happen depending on job situation and how passionate I am and what the feedback is and everything else. But I am working actively on a business concept at the moment that, like I say, a half a dozen people or so will be aware about, including several of the people who watch this channel. So yeah, so that's quite exciting and quite nerve-wracking to be honest. But like I say, I will share that in either next month's video or the one after. And maybe we'll do a dedicated video for it if I get really serious. But yeah, I think I'm onto something. It's not really like me to be an ideas man. Normally I'm more of like I'm like a Wozniak rather than a Jobs. But I think, like I say, I've come up with a good idea that hits a lot of my experiences and interests, and I'm going to see if we can do something with it. So that's what's happening in the background. Anyway, like I say, it was interesting that I did get offered a job, literally, contract in my email box, and then decided it just wasn't quite right. So decided to walk away rather than messing anyone else around. And that's not a decision I regret, and I think it was the right decision. Like I say, my heart told me it just wasn't in it basically. So yeah, that's where we currently are. So feeling pretty good still. Still have the better part of a year in terms of savings. And by the way, I still have like 14 grand in my general investment accounts as well, which I'm trying not to touch, but we could also rely on those as well if needed. Anyway, I want to do a breakdown next of how we're doing against targets and also look at the last couple of years rather than just sort of the last year, just so we can really see what the changes are over that time period. Right, so I now have this data broken down since January 2023, and it's not normally I look across this sort of time frame, but sometimes it's nice to do because you get a really good idea as to how it's going. So I just wanted to share mainly because I thought it was interesting. You can see when I first started, we were in the sort of 350 region. We're now, approaching 700,000, and it's nice to see the changes and how it's going. Unsurprisingly for me, the ISA has risen very fast. We max out two ISAs every year for the last 5 years. So obviously, a quick bit of maths will tell you that that's 200 grand of our own money there. And our ISAs at the moment are something like 280, 290,000. So the rest obviously being profit. So that's been going great. I've really enjoyed getting into investing. I would have gone even more so, but my wife working in private equity limits the flexibility I have. I can't buy single shares. So I would have been more into it, I suspect. As it is, however, I am still enjoying the thematic investing. And I'm also enjoying the Discord conversations I have with people as well, and just generally being involved in that. What's also interesting to me is pensions. Like, our pension investments weren't 40 grand a year, but the last bonuses my wife and I had, we did a significant salary sack that sort of caught up quite a lot. And to be fair, the pensions have been performing pretty solidly. We have the most risky pensions I can find, which isn't particularly risky, but all in stocks, all in sort of tech growth, emerging markets, small caps, that kind of stuff. So relatively ambitious, but yeah, I was surprised actually. The pensions have also been growing super solidly, both in terms of performance, not quite as strong as the ISAs, but also we have been adding again a couple of fairly big, five-figure contributions over the last year or so that have boosted it further. So that's nice to see. Because we plan to retire at 55, and my wife would be 53 at the time. That's way before we'll be able to access our pensions. So that's why the ISAs are the most important. But obviously, we'll move into pensions once we can access them. Probably going to be sort of 59, depending on the UK regulation at the time. Our house equity was unchanged this month. This is really just an admin thing. I was away and everything else in May, and I have a new mortgage with a new bank, so that all got transferred over. And I just haven't quite gotten to grips yet with the new logins and everything else to know what my house equity is. So we will work all of that out next month and have an updated figure. But just in case anyone was curious there about the reason for that. The other thing to note as well is you'll see between March and April that the house equity figure actually fell. We got our house revalued, and that's sort of a readjustment to factor that in. So that's a real figure, I suppose, on our evaluation from a couple of months ago. So I just felt like, although we didn't sell our house, we now had sort of updated information. Normally, what I do to calculate that number is just grow it by 2% a year, which is roughly what my local borough is growing. So obviously, it was a little bit disappointing because it sort of wiped out a little bit of paper profit. But it is what it is. So that's I don't really think too much about it because we haven't sold a house, so it's kind of all just paper transactions really. Our cash reserves do remain healthy, as I touched on. We've got the money on the credit cards available. We've got sort of 13 grand in cash in our Santander accounts, and then we've got another 13 grand, actually now more like 14 grand in our general investment accounts as well. So our cash position, I would say, remains relatively healthy, which is going to be useful if I do stop playing poker, because I'll need to take sort of 3 to 5 grand of that as a bankroll. So a double reason to have a healthy cash position. And that's it broken down as well. So that's how that's looking. I just want to finish the video in terms of the road to 1 million graph. We looked more at the 5 million last month, which is a little bit abstract, but I want to sort of zoom in because this isn't too far away now. All right, so here is our road to 1 million by the end of 2027. We are still on track. Great, and broadly in line with expectations. You can see here it's hovering around the blue line. It's never deviated too far away from it, to be honest. But yeah, we're in a happy place. I'll show the 5 million one periodically. I sort of changed my mind about how close I am and how far away it is, because it still seems fairly far away, right? I'm sort of still 20 years away from retiring. I'm 38, so I hope to retire when I'm 55. But actually, at the same time, I've been investing now for 5 years. So the fact is, it's sort of 17, 18 years away means we're already kind of 20% of the way there. So although it's still quite far away, it's not absurdly far away. We're just going to be doing this another 4 or 5 times, and it'll be time for me to retire. So I will keep an eye on it, and I think as time goes on, maybe once we do get to the million, we'll then transfer over maybe to 3 million or 2.5, and then we'll focus on the five, because by then we'll be sort of halfway through our journey. But yeah, really pleased with this, how it's going. We're technically 41k ahead of the blue line. It doesn't look like it because the numbers here are so big. And that's actually 9k ahead of last month's comparable. Again, I do expect this to be moved up fairly quickly. We were flattered by a pretty good market overall last month, all things considered, pretty erratic, but it turned out quite well. And most of our money is exposed to stock markets. So yeah, so even though I'm not working or contributing at the moment, financially at least, we still increased actually our sort of headroom above. But all it's going to take is well, Trump and Musk falling out with each other, or some other issue, and suddenly it's going to be right back down again. So again, to me, this is broadly trading in line with expectations, one way or another. I just want to round off just by reiterating what I've said before, which is when I planned this, it was 5 years ago. I think I was a little bit too ambitious to start with. I think the only reason the red line is above the blue line right now is because the markets have been fairly good over the last few years. Otherwise, I think it would be under because I sort of didn't put enough of a runway in before things really get going. What this does mean, though, is if the red line does continue above the blue line, that actually will be in a really terrific position in sort of 15 to 20 years because we might even be able to retire even earlier, or maybe we retire slightly better, because we would be running ahead of those kind of expectations. Again, we're both earning more than I expected, and the markets have been better than I expected. I'm sort of was expecting an 8% market return per year. It's been much higher than that, but obviously it's only 5 years, right? Crazy things happen. and everything else. So right now it seems too far away to be thinking about something like retirement, and instead we're just focusing on the somewhat vanity, but also somewhat rewarding target of getting to 1 million in terms of boss hog familial wealth. So this feels great. So that's where we currently are anyway. I just wanted to end on that sort of caveat. Like I know right now it's we've been very fortunate with the performances and everything else. I'm not blind to that fact, but we're just riding the market like everyone else at the moment. So yeah, that's how it's going. Honestly, quite well considering I didn't earn anything this month, and hopefully though that's going to be changing over the next few weeks. So let's see. But thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your wealth building. Bye for now.